Okay. Hello, everybody. Vlad here, the community manager of Daviddtech. Today we have sort of a unique meeting, I should say. We here are trying to bring inside our community different people representing or presenting different useful tools like exchanges or on-chain data analysis platforms and stuff like that. Books, authors, champion traders like we had David Kevin here recently, and today we have Coincall. Coincall is a both options and futures trading platform founded by actually traders inspired by user-friendly platforms like, for example, Robinhood, which I believe also has options and futures inside it as well. A couple strong keywords I should say that I've been scanning through the platform itself of CoinCall would be there is no KYC required. It's the first CX that fully supports third-party custodians to safeguard user assets. So I suppose CoinCall itself never actually stores any funds. Different versions of the platform, light and pro versions for both new and experienced users. Dollar denomination options trading. That is a question that I do have. What's all this about? Oriented towards educational programs. I see that you guys have like a learning platform. Just a quick thingy. I see that you're opening your Gmail. Take care because it's
Perfect.
under the show.
Thank you.
No problem. Take care with that. Last but not least, API connectivity and advanced risk to reward customization for both advanced and beginner users, but mostly for the beginner users. I believe that's the most important thing, to be aware of what you're actually risking while you're trading. Yeah, with all said, today we have Chris, which is the tutor of CoinCall, and he has joined us to talk today about options trading, 90% of the discussion, I suppose. How are you, Chris?
I'm good. How are you?
I'm good right now. Usually the weather is okay during this period, but at the moment it's pretty awful. So yeah, stuck at the computer.
Got it. Sounds good. Yeah, for CoinCall, we're going to be going through the Options 101 course. There are several different courses based on options out there. So I think one of the biggest value adds of having an options tutor like myself here is to be able to ask questions. And CoinCall has some specific questions that I'll be able to answer for you guys. And then if anyone else has questions as well, I think that that's going to be the biggest value add just because there are so many options courses out here. I'll let one of the CoinCall representatives kind of go through some of the initial about CoinCall things as well.
Mhm. Awesome. Uh, just some getting to know each other questions. For how long you have been into the trading world, like both crypto and the stocks or any other
Sure.
assets?
Yeah. So I've been trading crypto and other assets since 2017. I
Okay.
graduated from Georgia Tech. I have a master's degree in quantitative and computational finance. And I was a options trader at Genesis, or I was on the derivatives trading team at Genesis as an intern there, doing market research and market commentary on the derivatives side of the business, focusing specifically on options. And I was a trader at GSR, a large crypto native market maker here. So all of my experience in trading professionally has been in the cryptocurrency space. So I'm very familiar with the microstructure of a lot of the crypto options markets. CoinCall obviously is one of a crypto options and futures exchange that I've been working with, and I'm happy to kind of be here to help new traders or futures traders also get a little bit more exposure to the options side of the business.
Awesome. Great to know. So you're pretty much into the crypto world itself, or since when have you tried to also diversify, let's say?
I've been mainly specifically in the crypto world
Okay.
because I think that that's probably one of the most interesting asset classes to be in right now, and I also think it has the most opportunity for future growth, both career-wise and as an asset class. So yeah, I've been specifically in crypto, and there are a lot of different products you can use to trade crypto, whether that be perpetual futures or options or spot. But here today, I'm going to be discussing options with everyone.
Awesome. I mean, with all said, thank you very much for the introduction. Microphone is to you, my friend.
Sounds good. Is someone here from CoinCall who wants? I can just go through the CoinCall slides as well. So CoinCall's team members, they come from world's top exchanges and market makers, including Binance, JP Morgan, Optiver, UBS. They have over 9 years of experience in the crypto industry, and the founding CoinCall team has extensive experience in derivatives trading, as well as product and infrastructure development. The mission for CoinCall is to simplify crypto options and futures for all. Whenever they were pitching me as a crypto options tutor, the one thing they told me was they want to be the Robin Hood of the crypto options markets. And I think that that's a very noble cause to pursue, just because I think that the options markets in crypto are going to be something very interesting in the next couple of years. And being able to have a well thought out and robust user experience and user interface is something that I would definitely be looking for as both a retail and institutional trader. Why CoinCall? So it's kind of a one-stop options trading service. They also trade futures and perps. There's no KYC required. They don't store any funds from users. They're constantly introducing innovative financial products. I think one of the next things on the timeline might be altcoin options, so that's definitely something to keep a lookout for. And there's also free and professional options knowledge courses. There's things such as this. There's CoinCall Academy, which I'll share a QR code and link to later, and then the masterclass live sessions. I believe there is a giveaway going on with this stream as well. So the first 10 attendees who DM CoinCall Global on Twitter with the secret code, I think, get something, and then 5 attendees whose questions are picked by me, I believe, get something as well. But I think it also might be on the events stage of the Discord. I think there's something going on for that. So an introduction to myself. So I'm a Georgia Tech graduate. I graduated with a degree in biology in 2022, and I'm currently pursuing a master's degree in quantitative and computational finance. I'll be learning a lot of kind of stochastic calculus and financial mathematics, as well as deep options theory, C++, Python, things along those lines. However, I've also had previous experience as an options trader professionally at GSR, where I traded kind of Bitcoin and ETH options, as well as focused on pricing up some of the more esoteric altcoin options as well. I'm a DeFi mentor for Outlier Ventures and a co-founder of Infinity Labs, a DeFi consulting agency where I'm working with a couple of different exchanges, including CoinCall. I like to kind of start these discussions off with a market analysis or a recap of what's going on in the markets. So as we can kind of see over the past couple of days, we've been relatively calm in the markets. We'll see the volatility has also kind of started to decline. These are all kind of key factors that I take into account whenever I think of putting on options trades. And later on throughout the slides, we'll go through some of the factors that you should be thinking about whenever you are also putting on options trades. In terms of the magnitude of moves that have happened recently, they're relatively calm. We're kind of dwindling around the same 26K level that we've been sitting at for the past couple of weeks. A lot of events aren't really on the there aren't a lot of events right now that are kind of pushing around the markets. I think a lot of the interesting events are going to be happening in 2024. You've got the election cycle, the Bitcoin halvening. You also have the BlackRock spot ETF filing final deadline, which is March 15th. So right now, volatility is relatively on the decline, as well as price action is just kind of sitting there. In market structures like these, it's actually very difficult to trade options because whenever you have periods of low volatility, like it might not be worth it to sell the options for the premium you'd be gaining. And in terms of period of low volatility, even buying options, even though they're cheap, if you continue to have periods of low volatility, the returns might not be as good. So that's something I like to think about, and we'll go into more depth of what kind of factors I think about for options as well. In terms of continuing the market analysis and recap, so these are some of my favorite volatility indices. This kind of lets you know what's going on from a volatility perspective in both Ethereum and Bitcoin. And by knowing the volatility that's going on in Ethereum and Bitcoin, you can kind of get a sense of the relative pricing of options. The higher the volatility, the greater the price of options, simplistically. There's a lot of different things that come into account in terms of moneyness and in the money, at the money, out of the money, things like that. But this is kind of just gauging whether or not volatility is cheap or expensive, which would generally mean whether options are cheap or expensive. These are some of the most recent large block trades that are going through. So actually, over the last week, one of the interesting things was someone had spent 1.6 million in premium to purchase some of the 65K calls here. There was also a large trade for the 28th of June, 2024, in which someone was buying large blocks of the 85K calls here. So this is actually one of the more bullish trades I've seen in the past couple of weeks, which is super interesting. This could be delta hedged as well to take a bet on volatility here. But if not, this is definitely a very interesting trade to kind of see. This is also on screen though, so it seems like just a lot of people were buying up the 65K and 85K calls. This is around 5 days ago whenever we saw kind of the bullish breakout. But I also think that in terms of what these traders are kind of betting on, I believe that this is more so like exactly what I was saying with, okay, a lot of the events that are going to be happening that may push Bitcoin up are probably going to be happening in 2024. So I think this will maybe pick up on the halvening, and then maybe also, and this will definitely also pick up on the ETF decision. Yeah. So for the personal market view, I kind of like buying options. I don't really like selling the options. I like to hold big winners or let the options expire worthless. So that kind of fits with my trading style of buying cheap options and hoping to hit lottery ticket moves. I also think that traders have different styles. So some people like to take profits and cut losses quickly. They might be suited better to be a seller of options. But for me, I kind of like buying them in the current environment after this, big retracement, but with volatility kind of collapsing and some of the ETF deadlines being on the forefront. Buying volatility and options definitely sounds interesting, especially towards the upside. But one of the factors we'll take a look at as well is expiry. So being able to time the expiry is something that you definitely need to think about, just because a lot of these events I think are going to be happening in the first half of 2024. So if you buy options that expire before then, you might kind of get trapped there. So what is an option? Also, this is a link to CoinCall Academy if you have this on your phone, or you can just Google CoinCall Academy. This is where a lot of this content is sourced from. This is something that I've written, something that previous tutors at CoinCall have written. This is kind of our walkthrough options course, and me being along here with you to guide you through some of the beginner topics is kind of just the add-on and the benefit of being able to be a CoinCall tutor and help others out. So yeah, this is basically just a very much so basic options 101 course. A lot of this stuff, like it's all out there. You can probably find it on your own. So a lot of the value add is going to be through the questions. So I'm kind of just going to speed through this because all this is just on CoinCall Academy. It's very basic. And I feel like there are also better videos out there that'll go through the basics than me just reading off the slides. So we'll go through this and then answer a lot of questions about the markets and what you guys might think as well. So what is an option? Gives the buyer the right but not an obligation to buy or sell at a certain price, depending on a call or a put. If you're the buyer of a call, you have the right but not obligation to buy the underlying at a certain price. You use options for hedging, leverage, speculation. There's a lot of different ways to profit with options. We'll talk about the Greeks. I think that's in one of the questions that CoinCall will ask as well. There's puts and calls, and then we have our CoinCall Academy link here. Some of the key factors in options trading I like to think about are the underlying asset. So you have the Bitcoin and the Ethereum options, I think, on CoinCall, and then maybe down the line you'll also have some other asset classes. I like to think about the strike or the exercise price. So this is the price you'll buy or sell the asset at. So if you have a September 29th call option with a 25K strike and you're a buyer of that option, you have the right to buy Bitcoin at 25K. Yeah, you have the expiration date. This is kind of what I was talking about as well. So I said September 29th in that example. But for a lot of the trades you want to put on for some of these events, you might want a longer expiry. You have the contract size, so number of contracts. I could buy 10, I could buy 100 of those, things along those lines. Options type, you have the call or the put option. Exercise style, you can it's American or European, but I think on CoinCall it might be European. For premium, that's just the cost of the options contract. For trading method, on an exchange such as CoinCall or over the counter if you're a high net worth individual and onboarded with the OTC trading desks. I assume most of this will be trading on exchange. In terms of understanding option value and kind of some terms that go along with it, so the intrinsic value of an option, that's the immediate profit if exercised. It's the difference between the strike price and the asset price. If the asset price is 24K and you have a 23K call, you have $1,000 worth of intrinsic value. So the option should at least be $1,000 or more just because you have that much intrinsic value. Time value or the extrinsic value is the potential future value that's influenced by volatility, time to expiration, things along those lines. In the money, so if the exercise price is less than the current market price, you can have instant profit there. Your option's in the money. It has intrinsic value plus extrinsic value. Exercise price equals the current market price. That's at the money. You have no immediate profit or loss there because you have no intrinsic value. It's all based on extrinsic value. For out of the money options, it's if the exercise price is greater than the current market price, so it's purely extrinsic value. In conclusion, understanding intrinsic and time value for smart investment decisions is something you're definitely going to want to focus on. In terms of the advantage of options trading, Leverage. So this is the main reason retail traders kind of trade these options. They have high profit potential with small initial investments. Risk hedging. This is a little bit more on the institutional side. Can act as a safety net against market volatility. Can turn these potential losses into gains as well. You know, you buy puts on your underlying, and you could potentially turn losses into gains if we move down. Flexibility. So it's kind of like you have the opportunity to customize contracts and put on multiple strategies. A lot of this is on CoinCall Exchange's CoinCall Academy. You can kind of walk through some of the different strategies there. You can learn how to customize your contracts. Like I was discussing, you can change the expiry price, change the strike price, change the underlying asset you're trading on. As an example of an implication of using options to trade, you could buy put options as a safety net for stockholders or Bitcoin holders, things like that. Being the owner of a put option gives you kind of downside protection with only losing your premium if it doesn't go your way. For further learning, there's a lot of strategies like I was discussing at CoinCall Academy's practical strategies section. So here's kind of what an options ladder looks like at CoinCall. So you can, it's really nice because you can actually see the leverage they give as well. That's one thing that I feel like Robinhood and some other kind of trading platforms don't have is the amount of leverage that you're getting by trading these options. Usually, the higher the leverage, the lower the option is going to cost, just through the way the leverage is actually calculated. But here you see you've got the expiry date here. You can drop this down, choose different expiries. You've got the strike prices here. Whenever you select buy, you're always going to be buying on the ask price here. So they make it super, super simple to use the UI. And this is one of my favorite things about CoinCall. It's very easy to use. Um, yeah, so here's kind of the change in the options as well. This will be the previous ask price of the day before, I believe, compared to the current one now. So as you can see, these option values are slowly declining. The further out of the money you get, the more value it's going to lose. Yeah, so we can kind of go through some questions now. I think CoinCall has 10 plus questions, and then we can also discuss questions that you guys might have.
Sure. There are a few questions from our users. Is there any other questions and answer that it's already made by you guys, or would you like me to go to the users' questions?
I think I can pull up coin calls and walk through some of these. They sent me some. Let's see. Okay, I've got them. I'll go through some of these and then I can discuss with some of the users as well. Let's see. So, which option trading strategies do you think should best be used in the current market conditions? For myself, I think that right now, since we're trading range bound and volatility is relatively unpredictable, we're still on the decline. It could be interesting to sell options right now, but I also think that telling retail to sell options is kind of just you're going to end up blowing up your account if you do that. I can't really recommend people sell options, even if you do it smart by doing spreads. That's something that people should kind of look more into and kind of do a little bit of additional research in terms of how selling options works. One of the ways you can kind of do that is by putting on different spreads. I think there's another coin called Tutor Spread Greg who kind of goes into the benefits of trading spreads. I think that that could be interesting. If you think the upside is capped right now, you could probably put on a call credit spread where you're selling kind of a closer towards the in the money option and buying an out of the money call option for protection. You'll collect a credit, and then if it ends up below the price that you sold, you'll end up collecting the whole credit. That's definitely a strategy I kind of like right now. It's specifically asking for options trading strategies. So I think selling spreads, selling call spreads, and maybe selling some upside put spreads as well could be very interesting. Another question we kind of have here is, do you have any books recommended for new options traders? A lot of the books are very much so tailored towards academia, and you kind of need to have a complex background to understand a lot of these books. But I do think that Sheldon Nadenberg's Options and Volatility is one of the books that a lot of people kind of get given whenever they first join an options trading desk to think like an institution. I don't really think that there are books out there to learn from for retail traders. A lot of this, honestly, you could probably learn on YouTube. Options Alpha is where I learned all of it whenever I was first beginning, and I thought that that taught me a lot in terms of kind of learning what you need to know for beginner options traders. And I think that it was also nice because they focused a lot on being a beginner. So Options Alpha is a good YouTube channel that I used to learn a lot of my new options trading strategies before I went on to the institutional side. Are there specific market conditions that are better suited for options trading? Um, some of the market conditions I like for options trading would be Buying options in period of low volatility, but you kind of have to be careful because volatility is low for a reason. It's because the market is forecasting continued periods of low volatility. So kind of you need to be careful of whenever you're buying options. But I do think when volatility is lower, that's something that's very interesting in terms of the options. That's whenever you start trying to play like events and start trying to play breakouts. It's like, okay, if options trading is super low or volatility is super low, I might go around and buy some options. How does options trading differ from other trading methods like stocks or forex? I don't really trade forex at all, and I don't really look at that. I think that it's a lot of people on Instagram who sell courses and don't actually know how to trade. So I like to take a look at other methods like trading options in stocks or specifically trading options from the institutional perspective. In terms of how they differ, so just trading Delta One stocks and things like that, it's very different. You just buy or sell numbers of shares. However, whenever you're trading options, you have multiple different ways you can win or lose money, right? And this is another question we'll talk about later: is what are the Greeks? But these options contracts are priced and have a value based on Greeks. Um, yeah. So I guess the biggest difference from options trading and stocks is that the options trading, first of all, is leverage. And second of all, there's multiple different ways to make or lose money with options. If you're selling options, you can be collecting premium. If you're putting on a strategy in options, you can have a certain strategy that says something along the lines of, I don't think the stock's going to go above this price. And if I'm right, I'm going to make money. Whereas stocks, you're kind of just buying and hoping it goes up and selling and hoping it goes lower. So that's how I like to think about options versus stocks. So can you share some insights on using technical analysis in options trading? I don't really use technical analysis at all. I think that there's a lot of different methods that you can kind of leverage to be a successful options trader. A lot more of them are rooted in quantitative methods and findings rather than technical analysis. However, I do like to say that since so many people do believe in technical analysis, sometimes it can be a self-fulfilling prophecy. So one of the biggest ways I use technical analysis in options trading is to choose my strikes. So if every technical analyst out there is saying 30K is a strong support or a strong resistance, that's where I kind of like to think about where I put my strikes. So if I'm putting on an options trade strategy where I don't think Bitcoin's going above a certain price, and every technical analyst is saying that certain price is a resistance, then I'll kind of go there and be like, okay, maybe this is where I should choose the strike price for my option whenever I sell it and think it's going to be below a certain price. So if every analyst is saying, hey, 30K looks like a strong resistance. As we start getting closer to 30K, I'll start thinking about selling the 30K call option because by selling the 30K call option, I'm taking a bet that at expiry, the underlying price will be below 30K. So I don't like to use technical analysis to like make profits in that way, but I do like to use technical analysis to kind of think about where I should put my strikes. That's something that's very interesting for me. Are there specific indicators or metrics you recommend for evaluating options before executing a trade? The number one is probably definitely going to be volatility. If volatility is super high, then it's going to be very expensive to buy options. But volatility is high for a reason. It's because people may forecast future periods of high volatility. So volatility is definitely something I like to think about first. Second of all, open interest and volume. So if open interest in contract is very low, I think that that's also a sign that there might be low liquidity there. So the spread between the bid and the ask of the option might not be very beneficial. So if anyone's ever traded options on Robinhood, which is what Coincall is attempting to kind of replicate, if you trade options on SPY or single stock options on very liquid underlying, such as Apple or Amazon stock, you'll see that the bid ask spread is relatively tight. So the difference between the ask price and the bid price is relatively low compared to maybe trading options on something that doesn't have as much volume on the underlying. That's whenever you'll see something along the lines of I was trading options on Robinhood previously, and like the bid ask spread for these options would maybe be 50 cents or 25 cents. And whenever you're trading options, 50 and 25 cents, that is actually 50 and $25. So that'll one of the things for me is typically looking at the liquidity of the underlying. You can kind of measure that in terms of the open interest. I want to trade the most liquid options, which are probably going to be Bitcoin and ETH. They're going to be a little bit more focused towards at the money or out of the money. Yeah. So volatility and open interest are two metrics I like to look at before executing a trade. In terms of how beginners can avoid over trading and maintaining a disciplined approach in options trading, well, the one thing I like to say is sometimes the best trade is no trade. It can be difficult to sit on your hands and tell yourself not to put on a trade, but this is something that I was definitely guilty of whenever I first started trading options as a beginner. I was just trying to buy and sell options all the time. I tried to have a trade on it every moment. Every time a new week would come around, I'd make sure to enter the week with an options trade. And I quickly realized that that's definitely not the best way to trade. One of the biggest things for me is being opportunistic on the trades that I take. So I really like to wait until I think every condition is perfect to put a trade on. Um, because by not losing money, that also means you're winning, I feel like. So for me, as long as I'm not losing money, I feel good. And then I kind of just sit and wait for the best environment to put trades on. Another question is, what is the significance of choosing the right expiration date for options trades, and how do beginners go about it? We were just discussing this in the slides, and I think one of the biggest ways to think about choosing an expiry date is how quickly do you think you're going to be right, and then also what are you trading and what are you trading around. If you're trading on an event that happens in March and you're thinking about it in September, well, either if you think that the event isn't going to happen until March, maybe you should just wait to buy options, as it'll start to get cheaper. Or if you're specifically wanting to bet on an event like that, you could probably just choose the expiry date to be after that event. However, you have to be cognizant that if there's no moves prior to that event, you're slowly going to be losing value in that option due to theta. So you kind of want to get as close to the event as possible. If you're wanting to bet on an event, you're going to want to get as close to the event as possible before kind of placing that trade. However, if you're taking more of a longer term view, you can definitely kind of skew your options expiries like that. Another question is, can you explain the Greeks concept? Um, I heard it's really essential for evaluating an option, is what they say, and that's definitely true. So this is also on Coincall Academy, and it's probably a little bit more in depth there. But the Greeks, delta, vega, gamma, and theta. There's also one called rho, but I don't really think about it too much. Those 4 or 5 Greeks, those are how the options contract is valued. So there's definitely a video on there by Options Alpha, like I was talking about, that goes into it a little bit more in depth. They're each like 5 to 10 minute videos. Very beneficial, and that's how I learned from a beginner. But yeah, explaining the Greeks concept, those are the values that kind of that's how you can think about how the option is priced. Basically, for example, the delta is how much the options contract will change with a $1 move in the underlying. So that's something to think about as well. What are some red flags or warning signs beginners should watch out for when trading options? Um, Red flags, I guess, that you should watch out for when trading options are, if you trade, this is something that burned me whenever I was first trading equity options, is I would try to buy the options right before earnings and sell them after. But what was kind of happening is these options had a very high implied volatility price because it was right before an event. And they have a certain price that they're priced in to move. And basically what would happen with me and how I lost, a lot of money kind of early on learning this was, if you're buying options before something like an event or something like an earnings date, which is what a lot of people do, these options have a lot of extrinsic value premium in their volatility value. The next day, the volatility, since the event happened, is going to significantly drop. And due to Vega, another Greek, you will be losing a lot of money. So if the stock did not move a lot, you can still lose money even if it was right in the direction. So for me, I was buying kind of like these options, right before earnings. The stock would announce maybe like a something positive, and overnight the stock would go up 2 or 3%. And then the next morning I would still lose money, and I was wondering why that was. Well, it was because the implied volatility of the option I bought at might have been priced at 90, and then after the event, the options market opens up and it's priced at 50. Well, I just lost, for simplistic reasons, I would have lost 90 minus 50, which is 40 volatility points times Vega. Um, that's how much the options contract lost. So even though it could have gone in my direction, I still might have lost money. So one of the red flags or warning signs for beginners that you should watch out for is something called volatility crush. That's also something that you can learn more about. How can beginners track their progress and continually improve their options trading skills? Um, it's very difficult to kind of track your progress here, and options trading is definitely not something you can kind of just pick up and learn and win and lose a lot of money. Well, maybe you could lose a lot of money, but it's definitely something that's very difficult to consistently be a winner. Otherwise, you'd be like an institutional trader or a millionaire. right? So one of the biggest things for me in terms of tracking your progress, you can always think about like if you're making money, you're doing well. However, even if you're making money, if you're not making it for the right reasons, you could still end up making mistakes down the line whenever you have bigger trades to put on. So that's something that I like to think about. Even if I win the trade, I like to understand why. So if I bought an option, expiring in a week, and I end up getting lucky, and the price of the option ends up going up 4 or 5x, I like to think, did I get lucky because the event happened early, or was I correct in terms of predicting like, oh, maybe this X, Y, or Z event is going to have this impact on the option. I'm going to buy this option. So that's something I like to think about. Why did I win? Why did I win the trade? Um, what's your view on automated trading systems or bots for options trading, and should beginners consider them? Probably absolutely not. Automated trading systems, first of all, they're very sophisticated to kind of get up and running, especially for options trading. So options trading is managing a portfolio of nonlinear risk. I really don't think you should look into automated trading systems or bots for options trading at all, especially as a beginner. You're just going to get in over your head too quickly. I wasn't really even using those. I mean, those are kind of used for from a market maker's perspective to buy and sell a variety of different options and kind of collect spread on the bid ask. They're not really using automated trading systems or bots to kind of hold those options. Honestly, and the way that CoinCall is kind of designed as well, it's more like the Robinhood of options. If you want to buy options, you can buy options simply. If you want to sell them, you can sell them simply. I think that they're also coming out with phone app as well, which is very very awesome because that's kind of exactly what Robinhood has. So I wouldn't even think about automated trading system or bots for options trading as a beginner because they're not really going to add value. They're just going to get you in over your head. I do think that if you want to buy an option, just buy the option on the exchange. You don't have to think about, hey, do I need API connectivity to automatically place an order? Because a lot of the reasons retail people trade options, anyways, is just for leverage. They're not really trying to profit off of discrepancies or arbitrage opportunities in the options market. Um, Primarily for leverage. So you can just do that with a click. It's super easy. I do the same thing whenever I trade as retail. I don't really do anything crazy sophisticated, even if I understand what's going on in the underlying market. But those are all the questions that CoinCall had. So Vlad, if you have any from your Discord that you'd like me to answer in the next 15 or 20 minutes, I can definitely do that as well.
Awesome. Just for you to know, I just erased like 10 questions out of mine because you already answered them.
Yep.
So great job on that one. The first one would be I've been trading futures for about 5 years now and started for about a year ago to be profitable. Is it safe to say that I'm ready to trade options? Are options harder to trade than futures trading? Is there a difficulty chart? Is the difficulty more rewarding if so? So it's a question regarding the difficulty of options rather than
Sure.
futures.
Yeah, so I mean, I'd like to say if you've been trading futures for 5 years and you just started being profitable after a year, like I think that you're ready for options. I mean, the first thing is the best thing about options is they're kind of a supplement or augmentation to what you're already doing from a trading style. So the thing about futures is you're only betting on direction, right? If you're profitable, you're betting on if the stock is going up or if you're going down. Um, Another thing I'd like to think about with options though is you get to add all these different strategies as well. So you have to be either right on certain other aspects, whether that be like right within a certain time, or you're taking other different bets. I'd like to say that if you've been trading futures for 5 years, you're definitely okay to trade options. The thing that I'd like to think about simplistically though is whenever you're trading futures, you're making directional bets. So start off trading options with that same mindset of just taking directional bets. So I would just be buying calls and buying puts. I would not be selling options. If you think it's going up, you can buy calls. If you think it's going down, you can buy puts. The only difference is if you're doing it with options, you have to be right within a certain time. However, if you're trading futures right now, I'd assume you're getting in and out pretty quickly. You can do the same thing with options as well. You could either be trading weekly or monthly expiries and getting out in the same time period. But by trading these options, you kind of have exposure to leverage. Futures, you have the same thing as well. But by trading options as well, you get exposure to volatility. So if you buy an option that expires in a month, even if the stock does not move, if everyone else thinks that the stock will move and the implied volatility goes up there, you could still profit. So that's something I like to think about. But if you've been trading futures for 5 years, you're definitely ready for options. I would just take a look at some of the YouTube videos I discussed, such as options alpha, and start off with only buying calls or only buying puts. If you're doing that, then I think it's very easy to translate the same mentality that you had with futures over to the options markets. So yeah, I think you're definitely ready, and I do think that there is definitely benefit in switching from futures to options, especially if you start thinking about if you're very certain that an event is going to happen in a certain period of time, then options could be interesting. If you're not certain, then futures is probably a little bit better just because you can hold it for longer periods of time. But options do expire. I guess futures do as well, but you have to kind of be right within a certain period of time.
Hmm. And the difficulty being a little higher, I suppose, on the option side of things. Is it more rewarding from any point of view?
Yeah, yeah. I think they can be more rewarding if for the same trade. If you have the same idea of stock going up and you buy a future and the stock goes up, you'll make money. However, if you buy an option and the stock goes up and it happens very quickly, you can make a lot more money with the options and you can put up a lot less premium. Basically, by adding options here, you're betting on it happening within a certain time. And the quicker you're right, the more money you'll make. In terms of difficulty, I'd say it's only a little bit more difficult than futures, especially if you're just using options as a directional bet with leverage, because that's pretty much what futures do, anyways, as well.
Hmm. Great answer. Thank you very much. Kind of in the relationship with the first one, is there a minimum amount of money to start trading options? Can we leverage our money like futures to make our options more valuable?
Yeah, so I'd say minimum amount of money is very difficult to describe. You kind of just have to look at the prices of the call options and see if you can afford them. But one thing that you should think about and keep in mind is that options are inherently already leveraged. As you can see in this PowerPoint slide, CoinCall is great about this. It has the leverage exposure that you're exposed to in the actual chart here. So that's definitely something that I'd like to think about is futures. Sure, whenever you put up kind of your margin and your collateral, maybe you put up $1,000 and you get access to $20,000 in leverage total. These options are already leveraged, so you don't really need to leverage your capital to leverage your options trade. By buying an option, you're inherently already leveraged. So that's something I like to think about.
So, for example, trading options would not be recommended for people who, like, I don't know, put away $5 a month to invest into Shiba or
Oh,
something like that.
yeah, yeah, no, yeah. I don't think it's possible then, especially if you're only trading Bitcoin and ETH options, which is what CoinCall has right now.
Mhm.
I think maybe they'll get exposure to some altcoin options down the line, but for Bitcoin and ETH, yeah, those are relatively expensive, and even the cheap ones, they're cheap for a reason. It might be because they have no intrinsic value or something along those lines.
Mhm. Okay. Next question. Trading futures has the risk of your order not getting filled. Is there such risk? Is there any risk of your option trade not going through?
Depends on how you buy it. So if you're buying on the ask and selling on the bid, which means you're a market taker, no, that's just buying at a market order. But what you described in terms of future order not getting filled, that would mean you're probably like setting up limits.
Mhm.
So it depends on kind of like what style you're using. So if you're a market taker and you're buying on the ask, like you're 100% going to get filled, and if you're selling on the bid, you're 100% going to get filled. That's the equivalent of like a market order. If you're not getting filled on your futures trades, that's most likely because you're setting limit orders. So if Bitcoin's at 25K and you have a limit order to buy at you know um, 24.9K, you're not going to get filled until it drops to 24.9K. So that's the difference between a limit and a market order. Something you can Google as well.
Mhm. Regarding market and limit orders. Next question. How are the fees structures for option trading? For example, with the futures trading, we have market and limit entries and exits, funding rates, spreads, and so on. What should be the expected fee whenever we're trading an option or multiple?
Yeah, so options fees are going to depend on the exchange. I'm not really sure what CoinCall's options fees are. I'm sure it's on their website, but it's
Mhm.
definitely going to be cheaper than something like a futures trade on stocks or something like that. I think they might do it by contract, but also yeah. So it's definitely exchange specific. Like Robinhood doesn't do like fees or anything like that, or they only do fees whenever you exit, stuff like that. That's a coin call specific thing. You'd take a look at the exchange. But once you get the option, there's no additional fees incurred. It's not like a funding rate with futures where once you're into the position, the funding rate can change and all that stuff. Um, with coin call, if you buy the option, there's no extra fees afterwards.
Awesome. The next two questions are for me in person after this interview and just after checking the platform itself. So the first one would be, what does dollar denominated mean?
Uh, in terms of the coin call options,
Yeah,
dollar denominated, I would assume that that's the price. So it's trading in dollars and not euros or something like that, maybe. But also maybe USDC or stablecoin margined or denominated. That's what I would also think about. I think it means like I'm not really sure. I don't really. I think that would be a question for a coin call kind of exchange. Someone who's works on the exchange.
mhm.
Yeah.
Okay. And the last one for me, before we are getting into a little surprise section, I would say, because we just released a YouTube video about copy trading, actually a couple minutes ago. Be sure you watch it. Is copy trading available for options, or can you think of sort of model or something like that?
I actually think I was talking to one of the product designers at CoinCall, and I think that in the future there will be copy trading. I know that I think, don't quote me on that, but from what I've heard, I think that there will be a copy trading feature. CoinCall is really good about kind of taking into account what the retail users want, and I think that copy trading is something that I would definitely be interested in the future as well. So I think that that's something that CoinCall is planning on working on. Don't quote me on that, but from what I've heard, I think that that is something in line.
Okay, but I suppose for the futures side of thing, can you think of of a model for copy trading for options? Like, for example, if somebody has an option, can you copy trade that in the future aspect? Because in the end, it's pretty much the same. Like jump in, have an exit, have an entry,
Uh, so like you're saying, if someone buys futures thinking the price is going up, that someone can copy trade them by buying options and the price
something
going
like
up.
that, and the other way around. Yeah,
I guess you could probably do that. I'm trying
it's
to
like
think.
scratching on the left side with the right hand. I know, but still.
Y- Yeah, yeah, no, I think that that's something definitely possible. It would really matter, like if the person you're copy trading gets in and out quickly, I think that it could definitely be something that happens, but if it's a like mid-frequency trading future trader who kind of holds positions for 3 to 7 days, you need to be very cognizant that your options, even though it has leverage, they're decaying in theta over a period of time. So if the person you're copy trading is in and out pretty quickly, like within 5 or 10 minutes, and the amount that they're kind of like scalping or trading is a decent spread, you could definitely do that trade with options as well and copy trade them there.
Great. Awesome. So, at the end, pretty much, I would like to ask you and everybody who's invited a couple of fire questions. So, the fire questions are try to answer me as fast as possible, but still give me like a clear answer. Are you ready?
Hmm. Sure.
So, the first question, $1 million worth of Bitcoin or Ethereum as a gift for you, but locked away for a year. Which one would you choose?
I'll choose Ethereum. I kind of like. I think Ethereum is betting a little bit more on the technology, whereas Bitcoin's betting a little bit more on the macro. I know we have the Bitcoin spot ETF coming up, which is definitely bullish as well as the halvening. But I do think that altcoins and Ethereum is something that could be a very interesting trade over the next year, just because of the technology associated with it as well.
Is your point valid also, for example, for 5 years and 10 years?
I would still say so. I like to be bullish on the technology of blockchain and crypto, not just what I'm trading. So I think Ethereum definitely has decent upside potential. So I kind of like the Ethereum and the layer ones a little bit more than just pure Bitcoin.
hmm Great. Next one. Chart time frame. 5 minutes time frame or 1 hour time frame?
I would probably look at the 1 hour time frame, and that's just because I like to take a little bit more of a mid frequency view on options trading. So I like to think about holding the position maybe for 3 days to 2 weeks. If you're looking at 5 minutes, that's a little bit too narrow of a time frame for me to take a bet in terms of like a 3 to 14 weeks or 3 to 14 day kind of time period. So I like to look at the hour just because my trading style fits a little bit more of a longer term hold.
Okay, I think I know the next one, but still, forever trade options or futures from now on?
Definitely options. I think that there's so many different. I think that there's so many different ways to profit. It's also a little bit more like intellectually stimulating as well. So I like to be able to take bets on different parts of the market. Futures, it's only direction. With options, I can take a bet on being right in a certain period of time. I can take a bet on selling under a certain price, things like that. So I like options.
Mhm. Next one, price charts or on-chain data?
I kind of like price charts just because I think that it's. I was doing some quantitative analysis on some of the on-chain data, and I wasn't really able to find too much of a correlation. But maybe I was looking at the wrong stats. So I kind of like looking at price and volume a little bit more than on-chain data.
Mhm. And last one, listen to Elon Musk or Jerome Powell?
Uh, No, that's a good question. There's actually one funny trade that I did, and it was like whenever Elon Musk like he changed the picture of Twitter to a Doge, and Dogecoin went up, and I actually traded that because it took a while for the news to hit. I feel like Elon definitely has a lot of impact on the markets for crypto, and then Jerome, Powell definitely has a lot of impact on kind of how people view the macro. So if you want to be a little bit more like speculative and degen, then maybe Elon Musk. And if you want to be a little bit more focused on longer term macro trends, maybe I'd take a look at Powell.
Okay. Well, thank you very much. That was all from my side. If anybody else would like to ask anything to Chris, that's the time. I'm going to unmute people that didn't mute their microphones. So anyone, if there is any question, please do so, or even write it in a chat. If not, I think we covered pretty much everything.
Yep.
Rabbit with the thanks. You're welcome, Rabbit.
Was that
I see that somebody is typing in the chat or not. Well, I think that's it pretty much.
Awesome.
If you believe that we should have asked you something, or in case you believe that we have missed anything, please state your final couple remarks. Can you hear me?
Yep. Yep. Oh no, I think we're good.
If you believe that we have missed anything, like any sort of ending, or would you actually recommend people to try out options? Or
Oh, yeah, yeah. I think that if you've been trading futures for a longer period of time, I think you should definitely check out Coincall Exchange and start dipping in and exploring into the options space, especially if you thought any of these topics were interesting. I think if you've been trading futures for at least a couple of months, you can definitely handle options trading. Just the advice I would give you is try to replicate the same mindset you have with futures in terms of only betting on going up or down. Just buy calls or buy puts. Don't do anything crazy. Yeah, so that's kind of what I would like to think. Are there charts for options trading? I want to make a bot. I guess there's definitely charts as well out there. I have no clue how to make the bot, and I wouldn't recommend it just because whenever you're trading options automated and systematically, like you could be buying or selling a bunch of different options, and they all have different risk profiles. Buying an at the money option is very different than buying an out of the money option. But yeah.
Mhm. And also in correlating with Rabbit's question, are you using any kind of indicators on let's say for example TradingView?
The trading view indicators I have, they're all just the same ones you'd use for futures. I don't really take trades based on what I see on trading view. It's more like I have to have an idea of what I want to do. So if I think it's going up, I'll buy calls, and if I think it's going down, I'll buy puts. I don't really think like, oh, if it hits this certain line or whatever, then I'll buy calls or anything like that. I just like to have a view on the market before I enter the trades.
So for example, you'd be ready as of now to decide if the market is ready to actually jump in a trade, like hey, it actually looks bullish, let's jump in a trade, or it actually looks bearish, sorry,
Mhm.
in an option. And so
Yep. Yeah, that's kind of like what I would do. But I like to base a lot of my decisions on trading, not based on technical analysis, and a little bit more fundamental on what's going on in the markets.
So, if, for example, you would like to rate of 100%, what would be the technical analysis, the news, the, let's say, for example, the CPI calls and stuff like that?
Mhm.
Would you be able to tell me of which percentages would be out of 100 for you to consider
Sure.
going into a trade?
Yeah, so I'd like to say I still do look at technical analysis for the reason that I kind of discussed, choosing the option strikes. So I'd say like 25% technical analysis, and then maybe 50% kind of what's going on in the markets, like events, and then 25% quantitative analysis. So kind of taking into account what's going on in the volume, the open interest, quantitative signals, things along those lines.
Mm-hmm. Mm-hmm.
So 25, 50, 25.
Okay. Great. Well, thank you very much, Chris, for jumping into our community and talking about the options side of things. It's definitely something new. It's definitely something that we as a community should cover as well. And whenever you would like to come in as well, feel free to write to me. We can do it again anytime, any day, any hour. Thank you very much for coming in.
Awesome. Thanks, guys. See you around. Bye.
Thank you very much. Bye bye, guys.